Hello Investorholics and friends, hoping everybody is well today, and we'll be following on with our ETF Spotlight review series. Today we'll be focusing on gold ETFs again with QAU, which is a BetaShares Gold Bullion ETF. This one's currency hedged from BetaShares. Well, hello there Investorholics, this is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, let's dive on into some additional information. So, investment objective. So QAU is backed by physical gold bullion and aims to track the performance of the physical gold price hedged for currency movements to Australian US dollar exchange rates. Why would we bother with this one? Ability to access gold bullion as simply as buying any other share. Funds costs expected to be significantly lower than costs and expenses of buying, handling, storing and insuring your own physical gold. Funds backed by physical gold bullion which meets the LBMA standards, held at the London Vault premises of the gold custodian. Gold bullion is priced in US dollars. The fund's US dollar exposure is hedged to the Australian dollar. Okay, we had a net asset value of $16.97, trading just below that at $16.83. Market cap of 235 million. So this is the smallest gold ETF that I can see on the ASX. Management costs of 0.59%. So that's the most expensive ETF. For the focus on gold that I can find anyway, because it's gold, there's no dividend, so there's no yield. So the fund invests its assets into the purchase of physical gold bullion, bars, coins, whatever. Physical gold is held in an account maintained with JP Morgan Chase Bank and the JP Morgan's London Vault premises. So that's the same place as the other ETF called Gold. Their gold is held in the same vault in London. QAU may suit investors who prefer to manage their gold investments within their stockbroking account along with their other ASX equities and other holdings. Some experts suggest holding 1 to 5% of gold in your portfolio. The main reason to own gold is it is uncorrelated to other assets, and that helps reduce risk in volatile times. Yeah, as I mentioned, have a look at gold and PM Gold. PM Gold to me looks to be the best bet. Very low management cost of 0.15, and that's mainly due to the fact that the gold is stored here in Australia in their own vaults. So that's the Perth Mint. So performance wise, this one hasn't performed that great since inception, mainly due to the fact that it was actually listed at the end of the middle of 2011, and then sort of by 2013 the gold price had gone into a big slump which lasted till the end of 2018, and then it come back up through the last year and a half. So you can see the last year you've had performance of the fund of 29.5%, but overall if you bought on the 3rd of May 2011 you would only have a return of 11.6%, which isn't that great. But you know, if you bought it in the lows of 2016, you know, you would have done okay. So a few key points that I always keep in mind. So Warren Buffett says it doesn't do anything but sits there and it looks at you. So gold doesn't produce anything, hence there's no dividends. It just sits there and, it's effectively a currency, but it's a fear-based currency. In general, gold functions best as part of the diversified portfolio, particularly when it is acting as a hedge against a falling stock market. So it can be used as a counterbalance in a portfolio. Typically in a declining market, the price of gold tends to increase. So as one part of your portfolio is going down in value, another part's coming up, so effectively evens each other out. It's important to consider time frames when investing. So, over a short term, the returns of gold might look good. Over the longer term, they might not be they might have not actually done so well. And those time frames actually influence your investment returns. So as I always advocate, we need to be doing our research. So investors need to study markets to get an understanding of how the market is expected to perform. And that's probably a bit more difficult these days, given the living in lockdown and sort of not really understanding where the economy is going to go, because we don't really know how long it's going to take to find a vaccine or suppress the COVID-19 virus. But I think that's possibly an opportunity for people who can get the guess right. So gold is not a foolproof investment. As with stocks and bonds, its price fluctuates depending on multiple factors in the global economy, so macro, micro, all the rest of it. So definitely one to have a look at, gold in general. My feeling is this ETF, QAU, is probably the third out of the 3 gold ETFs that I've reviewed, third favourite, just for the sheer fact that it's actually the costs of managing it are quite high compared to the others, so that's the main factor for me. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.